Hi, I'm Tom Lydon, editor of ETF Trends, and I'm here in Chicago at the Morningstar ETF Conference with Lucas Turton and Rob Bernstein. These guys are ETF strategists, and the name of the company is Windham Capital Management. Guys, welcome, and I appreciate you spending some time with me.
Sure, thank you, Tom.
Thanks.
So, as this Chief Investment Officer, and you're directing advisors all the time, what are some of the important things that advisors are thinking about today, Lucas?
Well, I think a lot of advisors are challenged with where to actually put their money and how to manage in these turbulent times. And so what we're offering is something that fits in between your traditional equity portfolio and your fixed income portfolio, and that is a multi-asset income strategy. So seeking to generate a stable yield and yet maintain a balanced risk profile and have the opportunity for capital appreciation. So giving a dynamic or a tactical piece to the static equity and bond holdings in the portfolio.
Yeah, interesting. So Rob, you guys are being ETF strategists. You have multiple portfolios that are basically made up of ETFs, but one in particular is kind of a dynamic income strategy. Tell us a little bit about it.
Right, so we're coming up on 5 years with a multi-asset income strategy. And the concept behind it is that as yields are going to be changing, fixed income sources are going to be different tomorrow than they are today. So what we're looking at is both traditional and non-traditional income sources, areas where you'll be able to achieve the highest constant yield, but also looking at inflation protection. So it's the combination of how much risk are you willing to take to achieve the yield that you need. And that's what we're trying to produce here.
So as many advisors have embraced ETFs, I mean, number of ETFs or the assets have doubled in the last 4 years. We're great in a long bond environment and long equity environment, but now as we have the threat of rising rates or corrections in equity markets, these some advisors are feeling a little lonely. You actually come in and you'll actually work directly with advisors to help them with portfolio construction, is that right?
That's correct. So what we're going to do with the advisor is work through what their book is and what their objectives are. And the idea is to try to mirror what the objectives are with some strategies that either we have or suggestions we have on how to build that.
Great. And specifically back to the portfolio, Lucas, it's not just income that you have in there to be able to gain these income. You have some non-traditional investments too that kind of help to get that yield that you're looking for.
That's correct. So by combining various income sources, you can generate a stable income, which was the long-term goal of fixed income, but now with yields where they are, you need to introduce other asset classes. So we're going to allocate to preferred stocks, convertible bonds, REITs, high-yield bonds, some of the asset classes that probably aren't going to fall within your traditional portfolio, including dividend equities.
So it gives you more to choose from, number one.
Right.
But number two, Rob, you guys are tactical in nature, so it's not like an asset allocation strategy.
That's right.
There's some times when these minute asset classes are in or out of favor.
Right, so what we're trying to study is what is the environment of risk. So as we see the changes in the risk environment, markets becoming more risky or it's becoming less risky, we're going to adjust the portfolio, because the key beyond the yield is to make certain that you have capital preservation. So as we see more risk entering the market, we're going to adjust the exposure of the portfolio with the first idea of trying to maintain the highest yield possible. But then capital preservation is a key. And on the other side, when the markets are more calm, then we think it's more prudent to add risk to the portfolio. And it's not by a wide margin, but it's enough to try to provide some capital appreciation.
Great. And if people want to get in touch with you, can they go to windhamcapitalmanagement.com?
Windhamcapital.com, that's exactly it.
Windhamcapital.com.
Yeah.
And well, great. It's a pleasure meeting you guys.
Great.
I look forward to seeing you again soon.
Great, thank you.
Thank you.